right here in our live sessions. My name is Xavier McAdams. Welcome, guys, to the trade analysis for Xavier's University, brought to you by none other than the number one, the leading AAA trading, your world leading online trading provider. All right. So, guys, before anything else, let's first show you our risk disclaimer, a reminder about the risks involved when it comes to Forex trading and trading itself. Okay. All right, so kind of read about it. And right now, guys, okay, we're going to combine fundamental and technical analysis. All right. So, for my audience right now, to the beginners, all right, along with the message that we read earlier from the chat room, okay, when you begin to trade, guys, okay, the first thing that you have to know is that trading is a lot of risks. Okay, it has risks. Okay, you have to accept the risks in front of you. Okay, that's the one thing that you should first have in mind. Accept the risks. Okay, and make sure that when you accept the risks, you just don't make losing a habit. Okay, when you accept the risks. Okay, but there are risks, but there is a way for you to manage the risks. Okay. So imagine the example that I've given in the past. Let's imagine someone who would like to go scuba diving. Well, scuba diving is, well, I would not say it's 100% safe, right? Of course, it depends on where you'll be having your scuba diving, all right? You can be scuba diving with the sharks, all right? Or, there are potential threats underwater, okay? Not just the threats, all right, like the marine life. I'm talking about problems that may occur. Okay, so what do you do? Okay, so of course, for you to manage the risks, of course, you have to learn about scuba diving. That's the first thing. Okay, so learning is crucial. Okay, before you try to invest in something, okay, give it time to understand what you're getting into. Okay, I'm sure that you have other endeavors, okay, in life, and that, you know, wherein you, you gave time, right? You spend time, of course, to learn about these things, all right? It's like starting a business, all right? You have to first learn about a business before you start a business, okay? For you not to lose the business, because that's the best thing that you can do, not to lose the business, right? So you learn about trading and how to learn about trading. Okay, the first thing to do is to listen to experts, to coaches, okay, like listening to this live session. Okay, so you accept the risks, you manage the risks by using the risk management rules. Okay, so there are three rules for me when it comes to risk management. The first thing is to putting a stop loss on your trade. So I will demonstrate that later. But yeah, let me just show it to you right now. So when you say stop loss, okay, so it simply means that when you put a stop loss, guys, let's say, let's give it a different example right here. Let's show you guys Trading View as a great example. Okay, let's use Trading View for now. So let's say I'm trying to initiate a sell trade. Okay, so a sell trade would be a short position. Okay, short position, and my stop loss would be the one on top because I'm selling. All right, I'm anticipating the market. I'm wanting the market to go down so I can get the profit here. Okay, now stop loss is the other hand of the wheel, right here on top. Okay, so if you're selling, your stop loss would be on top. If you're buying, your stop loss would be at the bottom. Okay, so the reason why you put a stop loss is if the trade, okay, of course, if the market goes erratic or would go, market given is unpredicted, that's given. So if the market would go the other way around, okay, and if you don't put a stop loss, you will accumulate the losses further, okay, which is not a good thing. So what you do is you put a stop loss to stop the bleeding, all right? If your trade will bleed right here, the bleeding will stop right here. Your trade will automatically close. and that's already a loss for you. But you have managed the loss, all right, compared to having a loss for this amount compared to a loss by this amount. Okay, it's a huge difference, guys. It's a game changer. I would consider. So putting stop loss is important. Okay. So the next thing that I want you guys to know is the next thing. My second risk management rules is the position sizing. Okay, position sizing is putting the number of lots that you'll be trading. Okay, so my take on that is if the market is volatile, okay, and if you have analyzed the market and you have this really effective strategy, okay, that you should trust, okay, then you should go for a higher number of lots, okay, and you have to you have to have the courage to put the higher number of lots because, guys, the number of lots will determine how much you lose, okay? So when you change the number of lots, okay, let me show you an example here, okay? So let me bring you back to MetaTrader 5. So let's say, just an example. So we're now looking at US dollar versus Swiss franc. So let's say it's a sell. We anticipated the sell trade, but not yet because we are yet to analyze this market. But just for sample purposes, let me open the app. Okay, featured markets here. Let's say I'm selling this one. Okay, selling US dollar versus Swiss franc. So this is the number of lots. So I put stop loss, take profit. So let's say I am putting a stop loss at the 0.92700 level. Okay, that's my stop loss. And my take profit should be at 0.92300 level. I'll make it 400. Make it 0.92200 level. Okay. So guys, if I put my number of lots to 1 standard lot, this would happen. You would see the expected loss has changed. Okay, expected loss right now is $207. That's the amount of money that I would lose in this trade if the trade goes south. Goes south means trade goes the other way. And take profit. If I win the trade, I would get $340 right here. Okay. Now, if you think that your expected loss is something, or the amount is something that you cannot tolerate for now, okay, because you said you just want to start small, then start small by adjusting your number of lots, your position sizing to, let's say, 0.50, okay? So you would cut it in half, all right? It will just be around $100, okay? Now that brings us, guys, to our next rule, which is reward to risk ratio. Okay, so for you to make sure that in trading, okay, the simple way is to lose small but you win big, or you win bigger. Okay, so it will all depend on your reward to risk ratio. That's rule number 3, reward to risk ratio. Make sure that when you trade, when you open a position, you have a reward to risk ratio that will be in your favor. And how do you do that? Simply following a reward to risk ratio of 1.5 to 1, 2 to 1, 3 to 1. What do I mean about that? So let's give that an example, the figure earlier. So let's say when you lose, if you lose a trade, you will lose $200. But you have put a, you have arranged or set up a 2 to 1 reward to risk ratio. Now that will change things, because what will happen is your expected loss, let's say it's going to be $200, but your profit, your expected profit would be doubled, $400. That's a 2 to 1 reward to risk ratio. Okay, it's like doubling your profit, your loss. Now, you can sometimes go to 3 to 1, wherein your expected loss, let's say it's $200, but if you win the trade, you get $600. So always follow that rule, okay? So what I would suggest, all right, I think the least that you can do is a 1.5 to 1.5 to 1 reward to risk ratio. Or sometimes you would go 1 is to 1, that's fine, but you have to monitor the trade. And that's what scalping do, okay? Scalping, you have to monitor your trade, make sure that you wait for the trade to get profit. Sometimes you don't have to reach your maximum or your expected profit level, okay? So let's say you're expecting $600, but you're already earning $200, $100. You can go ahead and take it out. You have the liberty of closing your trade earlier than your take profit, all right, or the setup that you made, or from the setup that you made, okay? So these are the 3 rules, guys. Again, number 1, always put a stop loss on your trade. Number 2, position sizing. Always consider the number of lots that you'll be trading. Only trade, okay, to your risk tolerance, which means always trade, okay, trade money that you are willing to lose, all right, that that you can tolerate to lose. And step 3, always trade. Win bigger, lose small. That's a reward to risk ratio that you will always have to apply every time you trade. So those are 3 risk management rules. Very basic, guys, and those are the rules also that the legendary traders have in their every trade. Okay? So there are advanced rules, but I'm just giving you the basic, guys. That's the 3 basic risk management rules when it comes to trading. Okay? All right. And of course, a bonus of the rule, I would say, is the 4th one that I mentioned, which is putting a stop on your trade earlier than what is expected. Whether you win, whether you're winning, take it out. You're losing, take it out. Make sure that if you think, okay, that you might lose a lot of money, go back to your strategy, go back to the charts, look into the market, and check if it's time for you to take out your trade, whether it's winning or losing, okay? If you're satisfied with the profit, take it out. If you feel that you will bleed more, then take out the trade before even reaching your stop loss level, okay? Basic rules. So, yeah. But right now, we're going to combine fundamental and technical analysis. We'll first tell you more about the fundamental side, which is in this case for US dollar versus Swiss franc. Right now, we can see that the US dollar versus Swiss franc is clinging, okay, on top. Okay, so the retreat in the US Treasury bond yields and the dollar index right now joins failure to cross the 6-week-old resistance to trigger pullback moves. But right now, US dollar versus Swiss franc pair is on the verge, okay, of getting the benefits from the broad US dollar pullback. Okay, so the China and US debt ceiling talks seem underpinning cautious optimism, but guys, hawkish Fed bets still keep the buyers hopeful. Okay, and the market sentiment also improved due to the latest announcement or speech by the Chinese President Xi Jinping, which he stated that their readiness to deepen industrial and investment cooperation with Asian countries. Okay. Also, following were the upbeat comments from the Chinese Finance Minister Liu Kun, who said that this year the fiscal revenue for this year will grow, and though the growth rate will not be able too high, and that is still an optimism. Okay, in play. That's right. So guys, that is fundamental analysis telling us right now that the market, the buyers are still hopeful about what's happening. So let's see, okay? Let's use our technical analysis. Now the technical analysis involves only 3 steps, guys. Step 1, we identify the trend. Step 2, you predict what's going to happen next. Step 3, you determine whether you can trade, your entry point and set up your exit. Let's employ this strategy here, okay? So step 1, we're going to look at the 1 hour, 4 hour, and daily chart. 1 hour chart, let's identify the market. Market is right now surging higher, right here. Market right now is actually overbought, okay? That is a minor concern, but it is still a concern for us right now. 4-hour chart right here shows that the market has managed to go above 200 moving average, so it's going up right now. Also, RSI showing bullish signs. Daily chart right here shows that the market is still below 200 moving average, still a bearish country for the trend of the US dollar versus Swiss franc pair in the daily chart. But guys, I would be saying that right now I am identifying the market to be going up. Now, what should be the next movement of the market? Well, that will depend on what we'll see in TradingView, and which I will show to you right now. Here we go. Okay, here's TradingView. Oh, by the way, we have here another interaction in the chat room from Trader193446 says, hello, good evening, sir. Hello to you, Trader193446. So, yeah, we have here our number of viewers right now, guys, is at 421. Wow. Okay. And the number of likes, 84. All right, we're targeting 100. So, guys, help this live session reach 100 likes today. Moving on. So let's now perform and support the idea for step 2. Will the market continue the uptrend? Let's see. Let's first look at the momentum shown here by the DMI indicator at the bottom. DMI uses this ADX line, this thick red line right here. It has to read 25 and above to be considered a strong momentum. Right now it's at 18, so it's not strong. That's the 1-hour chart. MACD signals showing bullish signs. Okay. By the way, we're using Bollinger Bands, MACD, and DMI indicator right here. Okay. DMI is the directional movement index. MACD is the moving average convergence, divergence, and we have here our Bollinger Bands. Okay. So yeah, for 4-hour chart, still bullish, but market momentum is still weak at 20 level. Now we go to the daily chart, which also represents our overall outlook of the market. The overall outlook states here that the market is indeed bullish, but the momentum is so weak right now at the 9 level. Okay. So when the market has weak momentum, expect consolidation to continue on higher time frames. But in the much lower time frames, like let's say 1 hour and below, okay, market is striving to continue to rally and will looking to challenge the level, guys, a strong and tested level of resistance at 0.9270 right here. It's just right around the corner. So also there are fears right now that we saw earlier that the market in the 1-hour chart RSI readings is showing overbought status. Now if we combine the overbought status, okay, and we combine the 0.9270 level of resistance, strong and tested one, it would mean that when we combine a strong tested level of resistance or support and combine with the RSI and oversold or overbought readings, okay, it would simply imply a likely reversal, okay, a correction that might, okay, or will lead to a reversal eventually. So what's going to happen right now? So do we expect a reversal here for the market to have? Well, the reversal could be short-lived, which could only be defined as a correction. But if a reversal would continue, well, if the correction would continue, then eventually it will lead to a reversal. So just like what happened here last time. Okay, and we have also here quite, I would still consider this a huge correction, but this one, guys, is a reversal. Okay, because it traveled all the way from above the middle Bollinger Band to the lower Bollinger Bands right here. Okay, so this could be in play. This could happen again here for the US dollar versus Swiss franc. The only thing that will keep the hopes alive for the bulls is the US dollar index. As long as the US dollar index would print higher gains, okay, milder to higher gains, then we expect the market to continue to go up. Okay, so right now I would cling to the strong tested level of resistance. So there's going to be an expected reversal of the trend that I would say that would happen right now. So we are looking to sell it high because we're expecting the market to go down. So we go to a lower time frame, a 30-minute chart, and this is where we will have step 3 in play. So step 3, yes, as I mentioned, is to determine your entry point. Now, how do you determine if you enter the market or not? Okay, The two things that will help you. The first thing is you are looking to sell at high. Okay, selling at high means the market or the trend should be above the middle Bollinger Band. Okay, and the best thing is when it touches or gets near the upper Bollinger Band, this is selling at high. Buying at low is right here. Okay, at this part. Okay, so buying at low is right here. Selling at high would be here. Okay, and the median right here is the middle Bollinger Band or the 20 moving average, right? So we should be looking at selling at high that would show across all lower time frames, the three lower time frames, the 30-minute, 15-minute, and the 5-minute chart. If these three charts would show all selling at high, all right, everything falls in your favor in that point, then you enter the market. Now, what if the market is not selling at high, but is having strong momentum? Yes, that's right. Let's say the market is not selling at high, but the market already started a strong momentum all the way down. You can still trade midway, although the reason why we're selling at high or buying at low is for us to get the maximum profit. But in cases wherein the market is already on a tear, right? Like having a strong trend, or the trend already started, then you can enter the market midway. And for you to determine that is you have to look at this thick line, ADX line, okay, that would show the market is reading 25 and above. Right now it's at 30-minute charts at 25.43, so it's 25 and above. DMI indicator, guys, is also indicated. It's also included in your AAA trading, app or indicators. Okay, and also you will also see that in trading in MetaTrader 5 platform, right? So if you guys have downloaded your own MetaTrader 5 platform, you can insert an indicator called the DMI, all right? And I'll show that to you, okay, on the next session. Not now, okay? On the next session, okay? So watch out for that. Next session, I will show you how to add DMI on MetaTrader 5 and how to add or how to use the DMI on your AAA trading app, where to read the ADX line, all right? Or let me just show it to you right now. Okay, let me just go ahead and continue. So I will just bring in okay. So we are now looking at let's bring you back, guys, to the 1-hour chart. Okay. So 1-hour chart, the DMI, the ADX line rather, is reading at 20. 20. Oh, okay. Let's go back to the 30-minute chart. Okay, so we can continue with step 3. Okay, we're not going back actually. So here we have. So it now reads 26. Market is having the momentum right now. A 30-minute chart. Now when I open the app, so when you open the trade, guys, okay. Okay, so here, let me open the app, okay, and let's say I've selected US dollar versus Swiss franc. And this is what it looks like, right? Okay, so I have to toggle to M30 or 30-minute view. This would show. Now, notice that at the bottom, you have your bottom indicators, MACD, RSI, you have KDJ, Williams R percentage, daily moving average, CCI, all right, the community channel index, and average to range ATR. We have here at the fourth tab, DMI. This is DMI, guys, directional movement index, okay? So notice that there are lines right here. You scroll down, there are 3 lines we have here. Gold, this gold, blue, green, and red. Okay. So the ADX line that you're trying to locate here, okay. So for here, notice that the ADX line here is reading at 26, okay, level. Now if you compare, let me just look in the ADX line right here, guys. Okay. So the ADX line right here is stated as ADXR. Okay. So ADXR is also similar. Okay. So for ADXR, I would say that the 30 level is the mid-level, not 25. It's 30. So 30 level, ADXR right now reads at 38.2, the blue line. So follow the blue line. If blue line is above 30, then it is said to be a strong momentum. Okay, that's how you use the DMI in your AAA trading app. Okay, you guys got that? Okay, that's wonderful. So right now, let's look at all the lower time frames. 30-minute, 15-minute. Okay. Also selling at high, having strong momentum. 5-minute chart. It's not selling at high, but has strong momentum. That's okay. All right. At least we have 3 consistent for the strong momentum right here. So that would mean one thing, guys. We will go ahead right now and open a trade for US dollar versus Swiss franc. Okay. So what I would do is I would open a position right now, going back to the 1-hour chart. Okay, or rather, yeah, 1-hour chart, and I would be making a short position here at the current price level. My stop loss, I would be making my stop loss right here at only at 0.9280. Okay, but my take profit, guys, I would bring it all the way down right here at the 0.9180 level. Now that is a 2.5 to 1 reward to risk ratio for US dollar versus Swiss franc. Okay. So if I lose, I only lose, and I should stop the bleeding here. But if I win here. Okay, I win bigger. That is. Okay. So let me go ahead, guys, and open the app, and let's initiate our first trade of this live session. Okay. So let's go to Featured Markets tab. By the way, guys, we have reached 100 likes. That's remarkable. Thank you, everyone. You are truly indeed a great audience. US dollar versus Swiss franc. Let's go ahead, guys, and sell. Click the sell button this time. Okay, but for the number of lots, guys, I will be only issuing a 0.50 mini lot. 0.50 only, okay? The margin will be 250 for me. So stop loss, again, stop loss should be at 0.9280. My take profit should be at 0.9180. Okay? If I win, if I garner $50, $40, if you're happy about it, if you think that's great, then go ahead and close your trade, okay? So what I would do is I would be placing this trade right now. US dollar versus Swiss franc sell trade, 0.50. Mini lot, stop loss, 0.9280. Okay, 0.9280. Take profit at 0.9180. Let's go ahead, guys, initiate our first trade of this live session.